Capital city luxury listings are rising. There's been a 49% jump in homes above $3 million year on year. Eleanor Creagh, economist at RBA Group, joins me now. Eleanor, we've reached spring. We haven't quite reached spring, but there's definitely a spring in the step of the real estate industry.
Yeah, exactly right. I mean, this week we've actually got more than 2,000 scheduled auctions. Now that's actually quite a bit higher than this time last year, but we've got to remember that's when both Sydney and Melbourne were in lockdown. And auction volumes are, I guess, seasonally low at the moment, and also a lot lower than the strong volumes we saw earlier this year. But, you know, you're quite right, spring is coming, and we do expect that as we approach early spring, and we've kind of seen a lot of would-be vendors perhaps holding off given there's a bit of uncertainty, or there was a bit of uncertainty around kind of how fast interest rates would rise and what the effect would be on the housing market, potentially holding off for a little bit more clarity. And we do expect some of those would-be vendors to be coming to market in early spring, and perhaps some stronger auction volumes coming through over the next few weeks as vendors take advantage before prices fall further.
Yeah, it's going to be interesting, isn't it, with this increase in luxury listings, and it doesn't seem like the price has been affected all that much in some of these areas when you look at data and recent results in some places, particularly in Sydney and Melbourne and different pockets.
Yeah, there's a lot of different pockets of the market in Sydney and Melbourne, that's right. And when it comes to luxury listings, we have seen that new listings for properties priced at or above $3 million have surged 49% year on year. Now, at the same time, mortgage rates have risen, maximum borrowing capacities have been constrained as interest rates have risen, and the cost of servicing a mortgage has also risen. So I guess the pool of buyers qualified to purchase a luxury property has shrunk, and we've also seen that reflected in sales volumes. So when it comes to sales of properties priced at or above $3 million, we've seen that sales have fallen 30% in the last 3 months as interest rates have risen relative to the 3 months prior. Now that means that there is a lot more choice out there when it comes to luxury properties, and that could create some opportunity for buyers.
But we are getting better news for home buyers from the RBA, aren't we? Or look, a little trinket of good news.
Yeah, the minutes released this week from the RBA, in keeping with the statement, again suggested that they are going to maintain a more data-dependent stance, again reiterating that they're not on a preset path with respect to rate rises, and also flagging an air of economic caution as well as the inflation pressures that Australia is currently experiencing. And also, again, highlighting what is, in the RBA's own words, a narrow path to keeping the economy on an even keel whilst trying to return inflation to their 2 to 3% target. So that language altogether perhaps suggesting that a return to a more measured pace of tightening or business as usual rate rises is perhaps coming sooner than later.
Yeah, and look, we do need to measure our comments around luxury listings a little bit, don't we? Because those people that think they're going to get something out of the bargain bin, it just may not work that way, because there's still a lot of money in the community. We've got international travel back. Lots of people that are buying in that $3, $4, $5 million bracket aren't looking at money that they're taking out from banks. There's a lot of factors.
Yeah, there's a lot of factors in play, and I guess we have to put what we're seeing at the moment in the context of what we've seen over the last couple of years. So home prices are still up more than 30% on pre-pandemic levels. So that does mean there's a lot of people out there that are sitting on substantial home equity. And that, of course, helps with people that are kind of looking to upgrade and the like. Although we have seen prices coming off in Sydney and Melbourne. So both Sydney and Melbourne, we've seen that home prices are now down more than 3% from their respective peaks. And of course, there are pockets or regions within Sydney and Melbourne where that's either a little bit more or a little bit less. But you're right to point that people are, sitting on sizable equity gains gathered over the last 2 years. A lot of people are sitting on savings and wealth buffers accumulated since the pandemic onset. So that does to some degree offset this fast pace of rate rises and the fact that we are seeing borrowing capacities constrained and the cost of servicing a mortgage rise.
Oh, absolutely. And when you think, say, 2.8 to 3.2% increase when most properties went up by over 30% in some spots, it's only a small thing. And for people my age and older, we'll remember taking loans out at 18, 19%. So the interest rates aren't all that high either. So it's interesting. We may have a lot of buyers just sitting on their hands to watch what goes on. And then spring could be a very interesting time right throughout the property market.
Yeah, I think it will be interesting. And I think there has been a lot of buyers that have potentially held off at the moment, just given the uncertainty around where future borrowing costs are going to be. But we have seen on realestate.com that the number of potential buyers that we track looking at property listings is still higher than pre-pandemic levels. So there is a pool of buyers that are still out there, and it will be really interesting to watch what happens in spring.
Yeah, absolutely. Eleanor, always good to chat. We'll do it again next week.
Thank you for having me.